Okay, so this is the continuation of our discussion on tax on employed taxpayers. So last video, we have already discussed uh, the part 1 of this topic. So we have already introduced what is compensation income, then the types of compensation income, and the details of this income will be discussed on the next chapter. Okay, then we have already discussed the minimum wage earner and what are the taxes on which an employee is liable to pay or subject to pay. So we have your graduated income tax or the normal income tax, as well as the capital gains and passive income if ever there are passive final tax on passive income if ever there are passive income which earned by the employee. Then we have already discussed the pro forma computation for employees under the employee-employer relationship. So that is the pro forma computation. Then we have already discussed uh, illustrations relating to tax on employed individual. Then the tax compliances of the employer. So since the taxpayer is employed, so it is the responsibility of the employer to comply with all the tax requirement by the Bureau of Internal Revenue as to withholding and remittance. And this will be the monthly compliance of the employer. Then, uh, we're going to introduce in this video what is the withholding tax table on compensation. So guys, it's like the annual tax table or the annual graduated income tax table. So if you're going to interpret, so there are two six brackets under the daily, weekly, semi-monthly, and monthly basis. So guys, we all know that withholding tax is just an estimated tax or advance tax withheld by the employer to its employees. So guys, the final reconciliation or the final computation will be on the year end. So guys, only the BIR prepared an arbitrary or estimated computation or estimated rates in order for the employers or for the taxpayers that will be the basis in their withholding. So how to interpret the tax table? First, you have to identify which scheme or basis the employer adopts. So provided in the table are daily, weekly, monthly, and monthly. So please take note that these rates or this graduated table is only applicable or effective starting January 1, 2018 and up to December 31, 2022. So after which, the new sets of table is applicable. So it can be then downloaded in the internet or in the website of the Bureau of Internal Revenue, and the legal basis for that is the same law which we are basing right now, which is the train law. So under train law man sa Japan. So please take note, starting January 1, 2023, we will no longer use this table. So but then again, the scheme or the system is still the same. You have to identify which payment or monthly sorry which payment does the employer adapts? Is it on a daily, weekly, semi-monthly, or monthly basis? So after that, you have to check the earnings or the compensation of that particular employee. Like for example, on a daily basis, if his income for that certain day is amounting to 685 and within 1095, so that employee will be under the bracket number 2. So just like in our graduated income tax table, the first uh, bracket sa ano na gani ng tax base, which is 685, will be subject to zero tax or zero withholding tax, and the excess of the actual income out from the 685 bracket will be subject to an additional tax of 20% over 685, and everything the same system will follow on the subsequent mga brackets na da. So you have to on that. So let's try an example. So we have an illustration provided. Okay, so the problem is Lolita and Angela and Esmeralda are employees of Motivated Incorporated. So compute their respective withholding taxes if Lolita paid on a daily basis, Angela on a weekly basis, and Esmeralda is on a semi-monthly basis. Okay, so given information, Lolita's wage for October 15 is 1,500. Then Angela's wage is for the second week, since Angela is on a semi-monthly basis, on a weekly basis. So the second week salary of wages of Angela is 5,000. Then Esmeralda's salary for October 1 to 15, or the first semi-monthly for the month of October, or what we call the first payroll date. Okay, so the first 15 days for the month of October of Esmeralda is amounting to 34,000. So let's compute separately each employee, since they have different schemes. They have different tax brackets. So first, let's compute the withholding tax of Lolita. So the tax bracket of Lolita will fall on the 1.5 will fall Lolita will be under bracket number 3. Bracket number 3. Bracket number 3, so that is 1,500. Okay? So the first bracket will be 1,096 as provided by the problem. As provide as provided by the problem, the first bracket of 1,096, oh sorry, as provided by the bracket, the table I mean, so it will be subject to a fixed tax of 82.19 pesos. Then the excess of 1,096, which is 1,500 minus 1,096 is equivalent to 404. Multiply it by an additional tax of 25%. So that gives us 1,001. 101. Add it to the fixed tax on the limitation, which is 1,096. That gives us a total withholding tax for for the daily wage of Angela of 1,083.19. So guys, Lolita will receive 1,500 less the withholding tax, less the mandatory contributions if applicable. Okay, so next, let's compute the weekly wage of Angela. Okay, so the computation bracket, or Angela earned for the second week of October in the amount of 5,000. So let's check that kung when bracket does Angela's income falls. So since it is on a weekly basis, so that would be 5,000. So that would be on bracket number 2. So 4,808 not over 7,691. So the tax on the first 40808 is 0. Then the excess of the actual weekly wage of Angela less the bracket of 4,808 will be subject to an additional tax of 20%. Okay? So that's it. So 0 on the first 4,808, then the excess of 5,000 less 4,808, multiply it by 20%, that is 38.40. So on that particular weekly wage of Angela of 5,000, it will be subject to a tax of 58.40 pesos. Okay? For Angela. So Angela, Esmeralda rather, is subject to a tax or to a salary of uh, for 15 days, which is 34,000. Let's check that on the table. Okay, so that would be on bracket number 4. So 33,333 not over to 83,383. Okay, so the tax would be 5,416.76 on the first 33,333, and the excess of the semi-annual of the taxpayer, semi-monthly of the taxpayer, less the limitation of 33,333 will be subject to an additional tax of 30%. Okay, so that would be the tax base of Lolita, of Esmeralda rather. Okay, so that's 5,486. Then the difference of 34,000, which is the salary of Esmeralda for the first 15 days of October, less the limitation of 333,333 on that particular bracket, is subject to an additional tax of 30%. So that is 200.10 pesos. Add it to the fixed tax of 5,416.67. So the total withholding tax of Esmeralda would be 5,616.77. So actually, this is just a review on how to apply your graduated income tax table. But in this particular view, this is just for withholding tax. So withholding tax, again, is just an advanced tax. It is just an arbitrated or estimated tax. So none of this computation is final. So this will be subject to an annual computation using the graduated income tax table. Okay, so these are just a basis or a tool for the employer on how to compute the withholding tax of its particular employees. Okay, so let's continue. So annual compliance of the employer. So this is the actual computation of the employer on that the taxes of its employees. Tanana di siya guys, all of his employees will be consolidated, will be summarized, and will be declared, computed using BIR Form 1604C. So if you have noticed in the return, there are columns, rows for each month, January up to December, then the date of remittance, then the payment, then the TRA or the proof of payment, and the amount of tax withheld. So guys, since the employer will pay the remaining taxes not withheld from the months of January up to November, since the month of December will be the month on to absorb all the differences between the actual tax computation and the total taxes withheld from the months of January to November. Okay, so income tax return of employee. So this is the proof that a certain employee of the company is computed and withheld ang iyang income tax return. So if that particular employee has one employer and there's no other income or either business or professional income in which that employer earned, so BIR Form 2316 will be the final income tax return of the employee. Okay? So everything or so the total to 2316 issued by motivated company or motivated incorporated should be equivalent or equal to the BIR Form 1604 complied and remitted filed by motivated company Inc. Okay, or the employer. So this is just the summary. BIR Form 1604C is just the summary of BIR Form 2316. Okay, next, income tax return for BIR Form 1700. I believe we have already discussed that one on the previous video or discussion. Okay, same with this illustration. Responsibilities of the employer. Okay, so we have already discussed that one. Next, let's go now to mixed income earner. So these are employees which has two or more sources of income subject to graduated income tax. So for example, he is an employee of a company, and at the same time he or she was allowed by his or her employee to practice her profession, or during available time he is doing business. So the both employee is earning compensation income and either professional or business income. So the term or the taxpayer is called as or termed as mixed income earner. So the taxes withheld by his employer will be considered as creditable withholding tax and not final tax. So what is mean by the second paragraph? So guys, it was the BIR Form 2316. So as I mentioned earlier, let's review. Your BIR Form 2316 is considered as the final tax if the taxpayer is an employee and there's no other income subject to normal tax ang gina-earn sa aton nga employee. So BIR Form 2316 is considered final. Okay? That's not the case if the taxpayer is a mixed income earner. So those BIR Form 2316 is considered as a withholding tax. So your BIR Form 2316 will not be the income tax return of a mixed income earner nga taxpayer. It is just a proof of withholding. So please take note. Okay. So mixed income earner computation, we have two options for mixed income earner. First option is to use the graduated income tax rate. So how to compute? First, you have to identify your gross sales or receipt, then less costs and expenses or OSD. In that sense, we can arrive at our taxable business income. Then, the taxable compensation income as provided by your BIR Form 2316 will be added to your business income. In that, we can arrive at your total taxable income, and this total taxable income will be subject to income tax using the graduated income tax table. Okay? So the question is, uh, there is double taxation if we are not allowed to deduct the total taxes withheld from our compensation. But the law allows to deduct. So it is stated earlier that the total tax withheld by your employer will be considered as creditable withholding tax. In short, that would be deducted in your income tax due in this portion. It will be deducted together if there are income taxes paid on previous quarter. So the system or the application is the same with income tax paid on previous quarters. So it is considered as a deduction from your income tax due in order to arrive at your at the taxpayer's income tax payable or still payable. Okay, that is the first option. The second option is what we call the application or the option of 8% income tax rate. Okay, so the same with our discussion on self-employed individual, mixed income earner can also select the what we call 8% income tax rate. But the problem is ang fixed deduction nga 250 because if we are going to the apply both 250 from his taxable compensation income and sa iyang professional or business income, there is double deduction of 250. So try to analyze, try to review, and you will find out that there is double deduction on the amount of 250 because the self-employed or professional income of a mixed income earner subject to 8%, the tax base is your gross receipts less 250 on the case of self-employed. So it was the 250 was already considered in computing the taxable compensation income. So there's double deduction already. So in option number 2, deducting fixed deduction of 250 is not allowed if the taxpayer or the mixed income earner is going to adopt the 8% income tax rate. So that's the unique uh, provision in applying the 8% income tax rate for mixed income earner. So let's review the formula. That is gross sales or receipt. Then that is already your taxable income since the fixed deduction is not allowed to be deducted from your gross receipts. Then based on that, we can adapt or we can compute your income tax rate of 8%. Multiply your taxable income times 8%, and that would be your income tax due, plus the taxable compensation income, which is withheld and remitted by your employer, then that is your total income tax due. For mixed income earner, opted to select 8% income tax rate. Okay, so that would be the computation. Next, so let's take Barats as an illustration or example. Barats is the corporate lawyer of Motivated Inc. And at the same time, he was allowed by his employer to practice his profession as a lawyer. He had the following data for 2020. So given information, the gross receipts from profession is 2,500,000. Then the cost and expenses for the practice of profession, which is equivalent to 1,300,000. Then the gross compensation income as a corporate lawyer of Motivated Company Inc. is 6 million. Okay, so first option, option number 1, the Barats will adopt automatically the graduated income tax table option. Okay, so of course your income tax on compensation income of 1,770,000, which is given, which is based on the graduated income tax table, will no longer be considered final if Barats uses the option number 1. Instead, 1,770,000 will be considered as, take note, withholding tax for option number 1. Okay, so gross compensation, let's first compute gross compensation of Mr. Barats, that's 6 million, plus the gross receipts, that's 2,500,000. So 6 million will be the salary, the taxable compensation income of Barats from employment. Then the gross receipts of 2,500,000 from practice of profession. Then less the cost and expenses, either using OSD, 40% na siya sang 8,500,000 kung pili ni Barats ang OSD, but the problem is silent, so we will assume that Mr. Barats is using the itemized deduction. And in our case, up to this point, we don't still discuss in detail itemized deduction, but instead we will use that as cost and expenses. So the amount is given 1,300,000. Okay, so taxable income will be 6 million plus 2,500,000, then less 1,300,000. Then the difference will be your taxable income, that is 7,200,000. So refer the figure on your graduated income tax table. Then we can arrive at the total graduated income tax of 2,154,000. So the question earlier, your 1,770,000, which is given or computed using the graduated income tax table, will be considered as withholding tax on compensation. So the amount of 1,770,000 will be deducted from your 2,154,000 in order to arrive for the income tax still due or payable under option number 1. Okay, for option number 2, since Bharat is using the 8% income tax option, so guys, you are not allowed to add the gross income from compensation, then the gross income from practice of profession, either professional or business income, which is 2 million for 2,500,000. You are not allowed to add it up or to sum it because your 6 million is subject to graduated income tax, then your 2,500,000 is subject to another rate or another computation, which is 8%. So they have different tax base. The tax base for 6 million is taxable compensation income, while the tax base for 8% is gross receipts or gross sales less the fixed, supposed to be the fixed ano na gani, fixed deduction of 250, but for mixed income earner that is no longer available. So obviously for mixed income earner, the base of 8% will be automatically or directly the gross receipts or gross income of the taxpayer, mixed income earner from profession or business. Okay, so the computation will be 2,500,000 and there's no further deduction allowed since he is using 8%. So 8% multiply or 2,500,000 multiplied by the 8% income tax rate, that's 180 plus the income tax on compensation income of Bharat from employment of 1,770,000. In this case, for option number 2, it is considered final income tax due. Unlike sa option 1, which is ang 1,770,000 is considered as creditable withholding tax. For option number 2, under 8% income tax rate, the 1,770,000 is considered as final tax. So in order to know how much is the income tax due Mr. Barat for under option 2, that is 1,770,000 plus the 8% from his practice of profession of 180. So the total income tax for the year of Mr. Barat is 1,950,000. Okay. So important highlight. I just want to give emphasis on the following. The income tax on compensation income for option number 1, which is in the amount of 1,770,000, is just considered as creditable withholding tax, and it will be deducted to the total income tax due for the year of 2,154,000. So in option number 1, just a recap, Mr. Barat will only pay the amount of 384,000. 384,000. For option number 2, the creditable withholding tax on computation is considered final. Okay, so there's no further computation if the taxpayer chooses option number 2. All they have to do is to separately compute the income from practice or profession. Ang sa option number 2. Okay? So let's proceed. How about if it is considered on a quarterly and year-end returns? How to consider, how to compute? So let's take KUPA as an example for quarterly income tax computation of mixed income earner. So KUPA is an accountant in a shopping mall and at the same time a part-time practitioner of his profession. So his profession, how much is the income tax payable of Kupa? So given information, the annual salary of Mr. Kupa is 8 million. Okay, that is gross, 8 million. Then Mr. Kopa was withheld by his employer, the shopping mall, in the amount of 2 million. Okay? So that is the tax computed by the shopping mall by the employer of Kupa, 2 million. Given another information, taxable income from practice of profession since Kupa is allowed by the shopping mall to practice his profession. So Kupa earned 1 million on the first quarter. Then on the second quarter, it is accumulated as of the term as of means accumulated. So Pupa earned an additional of 800. So for second quarter, a total of 1.8 million was earned by Kupa through his practice of profession. And on the third quarter, Kupa earned an accumulated income of 2,200,000. So at the end of the year, Kupa realized a professional income of 2,800,000. Okay, so let's compute first per quarter. Of course, we will not consider the withholding taxes on compensation income of KUPA since it is on the disposition of the employer, which is the shopping mall. And the monthly withholding tax of KUPA is just an estimated amount or an arbitrary amount or a advance tax payment. So there's no proof of monthly withholding that allowed by the Bureau of Internal Revenue to be credited on the monthly income of Kupa. So only the proof is just the payslip, but that is not the final proof. The final proof which is considered by the law is BIR Form 2316. And BIR Form 2316 is given to the employees at the end of the year after December 31. So that would be from January up to April 15 ang distribution of BIR form 2316. So it is proper that we will consider the 2 million withholding tax on compensation of KUPA at the end of the year, so on the annual computation. So we will no longer consider compensation income on on the quarterly basis. Okay? So the professional income, so as given in the problem, that's 1 million, 1.8, 2,200,000 for a total of 2,800,000 at the end of the year. Then the compensation of 8 million is considered at the end of the year, that's 8 million. Then the total taxable income, except for annual, we have to add your professional and compensation income for, so that's equivalent to 10,800,000. Okay? So using the income tax table, income tax table, so it will result to a 190,000 on the first quarter. On the second quarter, based on the taxable income of 1.8, the income tax due is 450,000. So we have to deduct the income tax paid on first quarter, that's 190. So the difference will be, let me, oh my, that's 260. Let me correct first the PowerPoint. Okay. Okay, going back to the computation. So, on the second quarter, Mr. Kupa will only pay 260. Then on the third quarter, Mr. Kupa will pay 104. So that is the result of the income tax due for the third quarter less the income tax due on the second quarter of 450. So that's the difference. The difference will be 104,000. And on the annual tax computation, uh, please take note that the professional income given by the problem or provided by the problem is already considered as taxable. So in short, it is already the result of gross income less either itemized deduction or optional standard deduction. But we don't know what are the options provided by or adopted by KUPA, but instead we are given by the problem directly the taxable income. Okay, that's why 2,800,000 plus 8,000,000, that's 10,800,000 based on the table that is the last bracket provided. So the tax is 300 3,390,000. So this is the total tax for both professional and compensation income of KUPA. But take note, we have already paid on the first three quarters the amount of 554. It is a must that this figure or this amount will be deducted to the income tax due. And also, Mr. KUPA was withheld in the amount of 2 million by his employer. Okay? So it is also a must that the 2 million withholding tax or tax on compensation income of Mr. Kupa is deducted from his total income tax due of 3,390,000. So we have to deduct this one. So what remains is the total income tax payable or still due in the amount of 836,000. So that is the total uh, amount that Mr. Copa will pay to the Bureau of Internal Revenue after the filing of his income tax return or BIR Form 1701 45 105 105 days after the close of the quarter. The close of the taxable year. Okay? So, I'm going to address questions after this live stream. Okay, so we are through with chapter 2, that is tax on individual taxpayer. We have already discussed how to compute income tax for self-employed, how to compute income tax for employed taxpayer, and we have already discussed how to consider mixed income earners, how to compute for the income tax of mixed income earners. So next discussion, we will focus on gross income, inclusions, exclusions, and deductions. So, if you have noticed, the illustrative problem provided has already identified our gross income and our costs and expenses. So we will discuss the provisions of the law on what amount we're going to consider as gross income and what are the limitations of our law in deducting costs and expenses. So we will learn that topic next video or next meeting. Okay guys, see you next
Thank you, sir.
Thank you, sir. Thank you, good sir.
Thank you, sir. Thank you, sir.